Paul Tudor Jones goes bearish on stocks and bullish on gold and Bitcoin. Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Branko, who's been looking at what the billionaire hedge fund manager Paul Tudor Jones has been saying about the unfolding geopolitical situation with the war in the Middle East and how he sees the flow through for gold and Bitcoin. How are you going today, Branko?
Good, Chris. Good, Chris. Keen to talk about today's topic.
Well, we're in a very interesting period of time because, we were just discussing before we came on air, like it almost feels like there's all this stuff going on in the world. We've got war breaking out in the Middle East, but everyone is paying attention to a degree, but do we have a bit of war fatigue here? We've had Ukraine situation for so long that I imagine if it was a different period of time and this had happened, we would have all been, the markets would have been going crazy, but they're sort of not going crazy. There's more fundamental themes going on. There's so much there. So do you want to maybe start us off today by talking specifically about what Jones was saying about why he's bearish on US equities in particular?
Yeah, I mean, on that first point, that's quite interesting. We're a bit of war fatigue. Like thinking about that, I remember the day that Russia invaded Ukraine. Like we were in the office, and gold was just like it was unbelievable. Like it was. I've never
Well,
seen
the
gold
people,
like
because
that.
people were sort of rushing in to buy and
And we did get a move in gold when the Palestine and stuff news broke, but nowhere near the same level. And I think you're right. People might start be kind of fatiguing a bit about these geopolitical events. However, Paul Tudor Jones at the moment is extremely bearish equities, and the two main reasons that he cites are the geopolitical tensions. With a few countries, not just Israel and Palestine. And again, I don't really get into that. I'm not an expert in that realm. He also mentions like China, Taiwan, Russia, Ukraine. So basically, given the geopolitical turmoil, he's just very bearish on that. And the other reason is the crazy high debt level in the US. And he had some interesting points about how, I'll see if I can pull it up here, but basically the debt to GDP ratio is about 122%, and it's projected to get to 195% by 2022. So it's quite extraordinary debt levels. And then you couple that with the geopolitical tensions across numerous countries, and that's why he's ultimately very bearish US equities at the moment.
so he's sort of looking at really the debt and that intersection, I suppose, between the debt and the geopolitical that's going on. That's how you summarize it.
Yeah, basically, you think that's basically why he's very bearish.
And they're both very compelling narratives on their own, I suppose. And then when you put them together,
Especially when you potentially couple the fact with maybe there is kind of some war fatigue, right? And then the true impacts of this war aren't actually priced into the markets right now. That's kind of
absolutely.
involved that could be at play here, where everyone's kind of seen it all before, and maybe we haven't fully seen the true impact of these geopolitical events.
Well, you could certainly see that from how the markets responded, because you didn't get that big run where people were effectively trying to front run, like thinking through the implications for oil, thinking through all the things that could happen. They weren't really trying to do that. They just, like, it moved a little bit, but then it sort of just continued on its way. Something you specifically mentioned in the news today, you talked about Tudor Jones talking or mentioning this Minsky moment on CNBC. So this was something that was a specific term he was using that was really summarizing his risk as he saw it. So can you maybe explain to us what that means and why it's important in the context of what he was saying?
Yeah, so a Minsky moment is basically it's the onset of a market collapse brought on by reckless, speculative activity, and that basically ends a bullish period. So his kind of way of framing this was, and I was giving an exact quote, was as interest costs go up in the United States, you get this vicious circle where high interest rates cause higher funding costs, cause higher debt issuance, which causes further bond liquidation, which causes higher rates, and you just get this cycle that just kind of spirals, and eventually that'll lead to a Minsky moment where the whole house of cards has to fall down. And again, that is exacerbated by the high debt in the US. So to service all this becomes increasingly costly because they're already in that high debt level. And then furthermore, bring it back to some more geopolitical stuff, that any big geopolitical issue can trigger something significantly as well within that. So that's basically what he refers to as his Minsky moment, and the high interest rates is quite a key component to that.
That's really interesting. And I actually do agree with that, because we know the debt situation is out of control. We've talked about that extensively here, and I just keep looking at it and going, well, I refer to it as basic maths, right? Like, you do the basic maths and you go, we can't have interest rates at this level and the debt as high as it is without the interest payments on that debt taking up a very large percentage of government spending, which will be unacceptable. So you can see it all, right? The basic maths tells you that this is coming. So I suppose what he's probably saying there is we just need a catalyst to cause, exactly as you described it, the house of cards come falling in on itself.
Yeah.
And the geopolitical stuff could certainly be that, even though, I mean, we started off here talking about the fact that there might be a little bit of war fatigue, but it could escalate where, things happen, gets out of control. And then that is that catalyst that just really does start that spiral off, like, kicks it off, that it just becomes unmanageable, out of control.
Yeah, I think there's like so many opportunities for a spiral to happen as well.
Yeah,
like, because you don't just have one war, you've got so many different wars and things going on. So there's like all over the globe, you could have some big thing with Russia, Ukraine, with China, Taiwan, with Palestine, Israel, and then that brings in all the I guess, for like a better word, FUD. I don't know.
Yeah.
Where and rightfully so, obviously, and then we will see them, as we'll talk about soon, probably move assets more towards defensive assets in the event that something like that happens.
Yes. And actually, just before we move on to talking about specifically the metals and Bitcoin and the things he was mentioning, there's been a bit of on Twitter, I noticed, or X, I noticed there was a bit of conversation around everyone thinks they're a geopolitical expert all of a sudden, and are trying to analyze what's going to happen based on things that are very difficult to predict, because geopolitics is notoriously, almost impossible to predict what will happen next. But I don't think we need to predict what's going to happen specifically, because it's the point you just made. There's a lot of things going on all at once. All of those, we don't need to predict what will happen specifically. We need to be able to say they're going to result in volatility and uncertainty. And the moment you have volatility and uncertainty as a certain, like we know that's going to happen in this environment, then that's where we really have to look out.
That's a good point. I think that it's hard to believe that market volatility is going to decrease from here on out. So
no, and these, even if we get resolutions in Ukraine tomorrow, we get resolutions in the Middle East tomorrow, like, to even say those words makes no sense, right? These are decades old, centuries old conflicts in some cases that are not going to be resolved quickly. And even if they are resolved quickly, the fuel is there, that the tension is there, that it takes a long time to actually normalize. So, sorry.
No, you go.
I was just going to say, if we go from that, what do you see as your outlook for some of the things that were mentioned, like gold and Bitcoin were mentioned specifically by Tudor Jones? Like, how do you see this playing or wrapping together in terms of what the investable angle is on this?
Yeah, so Paul Tudor Jones basically just said it's hard to like stocks. I like Bitcoin and gold. And the first point I want to bring up is, like, you've got this billionaire hedge fund manager mentioning Bitcoin, so I think that's good for digital asset space. To say he likes Bitcoin. Obviously, there's more of those guys and Michael Saylor and stuff, but Paul Tudor Jones is a very well-respected hedge fund manager outside of digital assets, so it's great news. And then also I would say that the key point that he made that I think makes a lot of sense around this is the US Treasuries used to be more of like a defensive asset that people would rotate into.
Yes.
And as they become less trusted, which we are seeing, as we discuss debt problems and everything, I don't think US Treasuries are the asset that they used to be in terms of like reliability, and obviously the return is poor and all that. So that kind of liquidity, there's a higher chance that's going to get rolled into things like gold and Bitcoin. And that's his key point. I think that's a great way to look at it. As far as a long-term outlook for these assets goes, more so with gold and Bitcoin in particular. But as these wars go on, obviously it's more likely that gold is going to perform well. Bitcoin is a harder one to nail down, I think. However, I think over the long term, we will eventually see it, as it's been discussed over and over, become more like a digital gold. So you have any thoughts, Chris?
Well, yeah, as you were saying that, I was just thinking, how does that fit within my framework? And my framework tends to focus, as in my personal framework that I use for this investing, tends to focus on global liquidity. And I can see war as being very positive for global liquidity, because we already know that the outflows of money out of the US funding things in the Ukraine war were substantial. So if you add compulsory spending effectively on fighting another war, that's a lot more money that's flowing out, and a lot more liquidity that's entering the market through one form or another. Because at the end of the day, it doesn't really matter where the money's coming from when it comes to these asset prices, because it all finds its way. That's money just finds its way through the economy. That's what it does. So there's that point, but also what you're saying about the bonds, and there's been a bit of a focus here. I mean, there's the extreme view that the US dollar dies at some point because it just can't sustain all of this. And then the other people, the other view is, well, no, it's the asset you rush to, which it has been, the asset that's been the safe play for decades now. So, you can see both sides, but I still struggle just logically to put together this idea that the safety from a credit and debt crisis is going to be the currency that is the most behind the credit and debt crisis. Like, logically, it doesn't add up. I get the arguments that historically people have run to that, but logically it doesn't add up. And at some point, I think everyone agrees at some point that relationship breaks down. The question is whether we're at that point.
So you see, like, almost from a global liquidity perspective, you see money flowing from US dollar to like a gold and Bitcoin.
Well, it's not direct. I see the money flowing from the US dollar into things like funding a war, if there's a war in the Middle East, that, right. All that is money that's spent. And in the process of that money being spent, it makes the government debt larger because they don't have the money. We already know they don't have it. Yeah. So it just accelerates that process, which accelerates the requirement for them to cut interest rates effectively, because they've got even more debt that they need to refinance and pay interest on. So, and remember, that new debt is all financed at the highest rates. The rates are right up there at the moment. So I can see a lot of arguments for why, in the medium term at least, maybe not tomorrow in the very, very short term, but in the medium term, there's more liquidity flowing into the market just because more spending happens. So, and both sides, like if you look at the US, both sides are going to agree that spending.
Yeah.
So, it's not, they're not going to be long debates and government shutdowns over spending money on supporting Israel in a Middle Eastern war, for example.
No, when it comes to war, I think both parties generally very happy with funding. So it'll be a very quick decision, that one.
Yeah. So just to sum that up, so your sort of view on the gold and Bitcoin thing, is it that really it's more the safety play, and if the safety play is moving away from US treasuries, then gold and Bitcoin are the logical, I mean gold particularly, but Bitcoin as well are the logical place?
Bitcoin, I think, that medium to long term will become that, but I think there's going to be a lot of money that's going to move away from treasuries for sure into those assets.
Yeah. Oh, well, that all makes a lot of sense for me. So thank you for that today, Branko. I think that's a great analysis and great sort of summary that pulls it all together, because it's a tricky one. As we said, everyone wants all of a sudden becomes a geopolitical expert. We're not claiming that, but we are claiming we're pretty confident that we're not heading to smooth sailing and low volatility anytime soon.
Right.
Yeah. So thank you. Thanks for everyone for watching. Remember, reach out with any questions or comments on the social platforms. That's us for today, but we'll be back tomorrow with Sam to talk about all things markets and metals. Until then, have a great rest of the day, everyone.